Okay, hello and welcome everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today's the 15th of August 2019, so welcome everyone. Welcome to this Thursday's morning session where we're going to have a look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimers. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest, and we can continue. Okay, also just a quick mentioning of our JFD YouTube channel here, to which you can always subscribe to in order not to miss any of our upcoming videos, and also our JFD Bank website, but specifically our JFD research page, where you can go in and have a look at different analysis that we do on a daily basis, and I believe you can find some of them useful. So yep, feel free to check us out, and we'll always be happy to see you here. Right, guys. Okay, first of all, the first instrument that I really wanted to jump in here, and that's the DAX. Now, in general, all the indices sold off, and yesterday, this is what I was talking about in the morning yesterday. And basically, even though we saw a nice move higher on Wednesday, on Tuesday, on the news, on the tariff news, on the tariff delay news, still, what I was saying, that the tariffs are not kind of the whole tension has not disappeared anywhere. So, and as you can see, the market kind of took it took everything the negative way, and we saw a nice good slide to the downside. And looking at this picture here on DAX, the technical picture, this was our initial scenario where when I was thinking that we may see this one pushing back up here, curving up and pushing then to the downside. Now, this downside resistance line, a bit of a tentative one, but somewhat kind of played out nicely. I mean, we did get a few breaks here, but overall kind of kept the direction right. So the direction was more to the, of course, to the downside, and it dropped lower and made its way below the lows of last week. Now, if we have a look at the cash index right now, and let me just quickly jump into that one, so we can see that it is rebounding somewhat. Some of this is rebounding a little bit here, still below this key area of previous support. Now we're going to be seen as a resistance, this 11,550 zone. So it's still slightly below that, but like I said, the index managed to move back up here again. As long as it's going to continue trading below this downside line, we will remain bearish, and we will continue targeting the downside, because like I said, the risk off environment is still here. So that's why we could see this one getting pressured further. Again, keep your eyes on this downside line. If we see a push above this downside line, then of course we could start looking at some higher levels. Initially, maybe we'll have a look at this one right here near the 11,650. A nice good push above this could in a way open the path towards slightly higher levels, but for those who are more on the cautious side, what you could do here is wait for a push above the 11,836-35 zone, approximately around there. And only then you could examine the upside if we see a push above this barrier. Now, again, like I said, I do understand it's quite a big of a move here, but to be honest, we'd rather be safe than sorry. And if we see a push back above this 11,836-35 zone, then we will consider a possible move initially towards the 200 EMA, but then we do have some better obstacles above here, so keep your eyes on those. But like I said, if we get that move above this 11,835, then yep, we will aim for the 200 EMA here on the 4-hour chart. In terms of the downside here, if of course for now we kind of need to target the downside because it's still trading below this downside line, and the next target for us could be around the 11,370 zone, which is near the low of the 27th of March. But to be honest, slightly below that we do have the 11,300 zone, which is basically the lowest point of March this year. So good potential target, good potential area for support, but let's see. For now, again, like I said, we are seeing a bit of correction. Let's see how this is gonna open up today, and we'll take it from there, guys. We'll see what he wants to do. And just let me double check quickly the calendar for today. As you probably are aware, some markets are on holiday, so but the US ones, the main indices are the main bourses are still open. So the Germany is open, UK is open, and the US is open as well. So basically, long story short, basically for now we are kind of aiming for a little bit lower, even though from the very short-term perspective we could see this one curving up a little bit here, pushing to the upside. But again, as long as it remains below, somewhere below this downside line, then yep, we will continue aiming to the downside. AUDUSD, very quickly on this one. So got a nice boost this morning. As you probably are aware, the employment data came out from Australia, so the unemployment rates remain the same, but the economy, the Australian economy, added around 41,000 new jobs. So this was taken very nicely in the positive way by the AUD traders, and we saw this one rebounding from this lower side of the range that I talked about in my previous videos. I've said about this, guys, because keep an eye on these two levels. We need to see a clear break, and ideally, to be honest, ideally we would like to see at least a close of a 4-hour candle below, either below this range or above this range. So that's why for now we're just going to continue monitoring all this. We're going to remain somewhat neutral because even though we are seeing this nice good rebound here, still the whole sentiment this is still, in general, the pair tends to be very vulnerable, especially in regards to the China-US trade tensions. So that's why, guys, for now, yes, we are seeing a nice rebound, but again, overall, of course, it's still within a downtrend. So any kind of move higher could be seen as a temporary correction. But again, like I said, looking at this picture from the very short-term perspective, there is a chance to see a bit of upside here. But then again, we cannot really talk about that until we see a clear break above the 0.6818 level here on the upside. Or if we continue to aim lower, then we need to see a drop below the 0.6743 zone, approximately around there, guys. So keep your eyes on that one. Jumping into another interesting pair, which is the euro dollar, and finally we managed to break the range. So the pair traveled yesterday, traveled lower, dropped below this 111.63 zone, and now basically what we are looking here at is first, you can see that today already the pair is getting held near the pivot, near today's pivot, which is around the 1.1154, 55, something like that. Again, even if it, let's say, if overshoots it, if it struggles to get back above the 1.1163, then we will aim for another round of selling. For those who are more on the cautious side, you could in a way wait until we see a drop below the yesterday's lows near the 1.1129, and if we see a drop below this, then yeah, we will aim for lower areas. But like I said, for now, given that if it remains trading below the 1.1163, then to be honest, our next target here is going to be around the 1.11, and then we'll take it from there. If suddenly this pushes back above this back, or should I say back inside this range, well, yeah, I mean, this still, as long as it kind of remains in this range, we're still going to be somewhat neutral, and we're just going to continue observing in this one. So let's say, in terms of the very short-term perspective, inside this range, so if this gets a push higher and let's say starts breaking this level right here, let me just quickly grab this line, recycle it, and this is, if it pushes above the 1.1119, I spoke about this level previously in one of my videos last week and the week before that. So if it gets a push above this, then in a way this could also place, maybe by the time it pushes higher, it could also place the pair above the 200 EMA here on the 4-hour chart, and we could see maybe a push further north here towards the upper side of this range that I was talking about previously, so near the 1.1250. But again, that's a bit of very short-term speculation. For now, the main focus for us is going to be, of course, this area around here. If it continues to hold, if let's say this pivot continues to hold, or let's say if this pivot gets a break, if this 1163 level continues to hold, now this is where it could become a little bit more interesting for the sellers, as we could see a slide back towards the 1.11 zone. So keep your eyes on that one, guys. Jumping into another very interesting pair as well, and that's the GBPNZD. I talked about this one yesterday and in general this week, but what I was saying is that basically the pair managed to travel higher again. Still, what I was saying, that I remain positive on this pair. The only thing is that, as you can see by the arrow that I've drawn yesterday, this is what we need. We need to see a clear break above this in order to, let's say, consider further acceleration here to the upside. You can see that the pair retraced back down again, but again, once again, it got held here near this this tentative upside support line. Again, let's see what it wants to do further. If, let's say, this upside line gets a break here, and by the way, we do have some data coming out later on from UK, and that's the retail sales. Yep, we do get the retail sales figures from UK, so that's why if they come, they're already expected to come out worse than the previous, and to be honest, much worse than the previous. So if, let's say, they come out even worse than expected, then, well, I mean, the pound could take a hit here. We could see this one sliding to the downside. But again, as I've mentioned yesterday in my video as well, what we need here is a drop below the 1.8632 zone, approximately around there, before kind of examining further declines. And this would also place the pair below this other tentative upside line that I've drawn here. So that's why for now I'm keeping these two here, because if this, let's say, drops below this the first upside line but gets held around here, it could rebound and push back up here. So again, like I said, keep your eyes on the data later on today. So let's see how that plays out. But again, for now, again, we are somewhat more bullish than bearish in this one, but then again, we are keeping a close eye on this, on some of these key support areas. Let's see how that's going to play out, and of course we're keeping a close eye on the data later on. But still, if you want to be more cautious, more careful, I mean, you could wait until this gets a push above the 1.8873 and then kind of aim for higher levels. If this gets a break below here, below the 1.8632, then yep, we will aim for lower areas. USDNOK, also relevant for today. We do have the interest rate decision from the Norwegian Central Bank. No surprises there. I mean, the expectation is for no surprises. It is believed to come out at the 1.25 level. So that's why, guys, for now, keep your eyes on this. You can see that it traveled higher. It tested this area near the 8.9930 31 32 zone, and from there you can see that the pair started declining slightly. It's currently balancing slightly above this key area of support near the 8.9565. Again, if the interest rate comes out the same as expected, probably there are not going to be much surprises here. Maybe we could see this one sliding back down again, but overall you can see that this pair is slightly ranging. So it's currently kind of stuck here. Let me just drag this one a little bit higher here. Let me just actually recycle some of these lines. So let's grab this one right here. Now then, this is what I'm talking about. Basically, it's currently stuck here in this little range here between the 8.8525 and the 8.9931. So that's why, guys, for now, we're going to be very careful here. We're going to continue monitoring this range. If we get a break through the upper side here, then that's wonderful. We could see higher levels, and by higher levels, and if I'll jump into actually a weekly chart, you can see that this is where the pair is currently stuck at. So basically it's stuck at the highest point, near the highest point of 2016. So good area of resistance. If this gets a break above the 8.9931-32 zone, you can see that this is going to be quite an interesting area, because this could open the path towards the highs of 2002. Now it's going to be quite interesting to see, because like I said, the pair has not been at these levels for quite a while now, so for about 17 years. And like I said, if we get a nice pop above this level, above this 8.9931, then yep, we will consider higher levels. And by higher levels, I mean the highs of 2002. In terms of the downside here, and let me just jump back into a 4-hour chart. If this slides back down, back below the 8.9565 zone, we could expect maybe this one to travel lower to test maybe the lower side of this range here. So that's why, guys, be very careful around here. For now, we're going to keep it short and simple. If we see a drop below this 8.9565, then yep, we'll consider this lower side of the range. And by the way, let me just quickly mark that on our chart for our future reference. And yep, so basically this is going to be our upper side. And in terms of the downside, this is what we're going to be targeting right here. So right, I hope that helps. Now the next pair I want to quickly touch on here is the USDCAD. Now this is quite interesting as well, and I've talked about this pair a lot this week, and basically I was saying that if we get a nice push above the 1.3267, we could see this one traveling higher. We could see this one pushing towards the beginning of August highs. You can see that it almost traveled to and tested the 1.3331 zone, but kind of it found good resistance. Let me just redraw this actually quickly. It found good resistance near this level right here, near the 1.3325, from which it kind of reversed back to the downside. It is now, this move lower could be seen as a temporary correction before another leg of buying. So in a way, it's aiming right now for the pivot, for today's pivot, which is around the 1.3284. If this area holds, then yep, we could see this one curving up and pushing back to the upside. We will initially aim only for the current highs of August, because we're gonna see how it performs around there. If it wants to break that, then that's wonderful for the bulls. We could see further acceleration to the upside. But if it struggles to get above it, then we could see something of a double top here. But again, that's a bit too early to talk about. For now, keep your eyes on this. Keep your eyes on this pair. If this decides to travel even, let's say, a little bit lower below the pivot, the last kind of option for the bulls to step in could be around here, this 1.3267 that I've previously mentioned, and then we could see maybe this one carving back to the upside. But again, for us to consider the downside, now previously I talked about this level right here, but given that the chart has shifted a little bit, so we can actually move our potential breakout point a little bit higher here, and this is where we're going to aim for. If we see a drop below below this upside support line, and then ideally see a drop below the 1.32 zone, roughly around there, then yep, we'll consider further declines. This would also place the pair below its 200 EMA here on the 4-hour chart, and all this could add up nicely for the bears to for more bears to step in and then push this one lower. So that's why, guys, for now, keep your eyes on this level. And the last pair I wanted to quickly touch on, and that's USDJPY. Declined yesterday, understandable. Markets sold off, yen buying picked up again. Looking at this picture here, I mean, it is a bit of a tricky one, to be honest, because now in order to get comfortable with further declines, ideally maybe we'll start considering lower levels if we see a push below the 105.5. This previously acted as a good area of support, temporary resistance here as well, and that's why if we see a drop below this, then yep, we could see further declines. The only thing is that for those who are more on the cautious side, in a way, what we could do here is wait for a clear drop below these recent lows. And let me just quickly put this on the chart. So this basically this week's lows, if we see a drop below them, then yep, we could consider further declines. This would confirm a forthcoming lower low, and the pair would slide further down, and that low here is near the 105 zone. In terms of the upside, well, we need to see a clear break above this 106.74 zone, approximately around there, before kind of, let's say, examining slightly higher levels. But again, like I said, for now we're going to be somewhat of neutral and somewhat careful, and wait and see for a clear breakthrough one of our levels here. And let me just quickly mark that for our future reference. So basically this is what we're looking here for in terms of the upside, and in terms of the downside we will start considering lower areas around here, around the 105.5, but just to get more excited and more comfortable with lower levels, ideally a drop below the 105 zone could do the trick here for the bears. Okay guys, I hope you found it useful. Thank you very much for sticking around and watching it till the end. If you want to join me later on at my Traders Tea Time, as always, that's 13:15 GMT. I'll be happy to see you there. If you have any questions, or if you would like me to cover certain instruments, please wait until this video is uploaded on YouTube, and you can always leave a comment after or below the video. So yep guys, thank you very much for attending this one, and I'll see you later. Thank you very much. Bye bye.